I want to talk about how every single share is a fake share traded on AMC. In addition, the daily average trading volume for August stood at 11.85 million, which is slightly higher than the average daily FTD count of 11.5 million. So not only is AMC trading a 1-to-1 ratio of FTDs day in and day out, at least for the entire month of August, but let me ask you a question. Can you find me another ticker that has an order imbalance every single day, buy side or sell side, but in AMC's case, particularly buy side? You can see right here NYSE order imbalance for 163,656 shares for the buy side. And here are 4 more just to show you, as well as another 4 more just to show you. So there's about 10 buy side imbalances that I just brought up as a quick example. And why does this implicate that they are fake shares? That every single share traded is a fake share? Well, we're going to get into that right now. All I ask you guys to do in return is please hit the like button, watch until the end of the video, and have post notifications on. Without further ado, get this video to 1,000 likes. Let's get into it. So I've covered this in the past, but in case you guys don't know, an imbalance of orders is when a market exchange receives too many of one kind of an order, whether it's buy, sell, or limit, and not enough of the order's counterpoint. For sellers to complete their trades, there must be buyers, and vice versa. So for buyers to complete their trades, there must be sellers. And when that doesn't happen and it's slanted too heavily in one direction, it creates an imbalance. So why are you seeing 10 imbalances for the buy side? It's because there aren't any sellers. But why are we still selling? Why do we still see volume even though there are no sellers and we're going to the downside? It's because AMC is matched day in and day out. FTD's 1-to-1 ratio, and we're going to talk about the manipulation in 1 second. Now, it's a good thing to see that there are tons of buy order imbalances coming in for AMC. However, this is what could be deadly for us from an SEC document as to how manipulators end up winning against a stock. Now, I'm not saying this is going to happen, but I want to bring it to your attention. In quotes, if the manipulator has driven the price close to zero to avoid the unveiling problem, will be informed investor or active traders re-enter the market and buy the underpriced shares? They will not unless they are confident they can overcome the impact of the manipulation. However, if they offer to buy shares, the manipulator can increase the naked short position to prevent the share price from rising. This is exactly what you guys are seeing right now. More are willing to come in and buy shares. That's why you're seeing these buy imbalances. However, the manipulator can increase the short position to prevent the share price from rising, which is exactly what we're seeing. Carrying on, if he can keep the price close to zero, then the prospective financiers are likely to conclude that the firm's prospects have worsened and refuse to lend or invest in its equity. Customers may cease doing business with it as well because its warranties will appear worthless. Eventually, the firm will exhaust its liquidity and have to file for bankruptcy. The manipulator will be relieved of its obligation to cover its short position if the firm's shares are canceled into bankruptcy. This scenario leads to a zero cost of covering short positions. This form of manipulation may involve a single manipulator or a group of manipulators who act in concert and make an unusually high percentage of apparently unlucky equity investments that become worthless in bankruptcy, all of which have unusually high trading volume, large and persistent fails to deliver, and a major drop in share price below the stock's intrinsic value, often to just pennies a share. Now, we see major high trading volume in stocks like Mullen, which we know has naked shorts. We see large persistent fails to deliver in AMC, which we also know has naked shorts. Basically, if their goal is to push it into bankruptcy, push it to pennies a share, get it delisted, get it canceled, then essentially they win. Now, I'm not going to hold it to it, but AMC FTDs, it may be possible that they have to be closed out on October 5th, which is 35 days after September 11th of 2023. The only reason I'm bringing this up is because we know we have a point of interest early August, and I know a lot of people get mad that the timeline gets pushed down, but it's based off of the catalyst, based off of the cycles, and based off of the volume that we have. I can't predict more fails to deliver. I can't predict this. I can't predict that, but the next setup we're looking at is early October. However, I wouldn't care about anything unless AMC breaks $15.30. I need to break over that level first, which is what we have tracking right now, and it is up 3.7% on the day, which is a good thing to see. Quick touch on the Ortex numbers: 11.54% short interest, 54% utilization, and the cost bar average sitting right around 4 to 5%. GameStop still sitting in this wedge, up 1.54%, sitting, waiting for this breakout. I think whatever the SPY does when the Fed talks today, GameStop will have a reaction to the upside or downside, breaking in or out of this wedge. However, it is If it is bearish, I think GameStop could hold $16.40, so watch that level. If we break out, I want to break over the relative highs right around $19.50. Also, AMC winning on the options chain for once in its lifetime, good thing to see. Now, former employees of Citadel Securities allege that the company engaged in harassment and intimidation. Families now getting bank accounts frozen by US banks. An Nvidia CEO just sold another chunk of Nvidia shares, which is the fourth sell in the last few days, and he has now sold over $120 million of Nvidia shares in the last couple of days. Finally, before we move on to the SPY and some additional stuff, Apple is planning to launch its own stock trading platform. They planned to launch this last year, but they ended up delaying it as the stock market ended up falling. And back to the Citadel thing, we know that there have been sketchy interviews, many bribes from Ken Griffin, and many secretive meetings, so it's not surprising to see that the company engaged in harassment and intimidation. Now, the DTCC put out an important notice regarding Citadel's bonds yesterday. These are debt instruments sold by corporations, institutions, and governments to raise money, and these continue to prove that Citadel is not okay, as they want everyone to believe. Now, before we move on, if you guys want up to 16 free stocks, each valued up to a couple $1,000s per stock, use my link, download Moomoo, sign up and make a deposit. You're also getting access to free level 2 order book data, so you can see where wills are loading up and dropping off shares, access to trading options, going long, going short, and more, and a guaranteed Tesla or Google stock. So use my link, sign up, and make a deposit. I know I said that pretty fast, but the benefits are absolutely insane for September. I'll leave that link in the very top of the description. Also, guys, if you want to join the Discord, the link is right under the video. I'm in there on the daily. You can talk with me. You can request videos. We post gains, post losses, and talk stocks all day long. And overall, just the best vibes in Discord. It's literally $1.99, so get in there. Now, we didn't get the interest rate response yet, but the SPY is basically trading sideways. Still looking at that hold at that 382 fib level for support on the SPY, which is right around 442.80, 442.85. Again, a pause. These are the levels I'm looking at. I'm looking at the SPY to come up to around 449. If we pause, if we cut, come up to 460. Obviously not all in one day. I'm just saying the macro perspective. And then if we hike rates down to 431, those are the quick levels I'm watching on the SPY. Just get ready for a response to come out today. US 10-year Treasury yield ends at 4.365%, which is the highest since 2007. Bank of America boosts its S&P 500 year-end price forecast by 7% to 4,600 amid AI hype, which is a bullish thing to see. However, a recession will hit by the spring and the S&P 500 will crash by 25% or more, according to David Rosenberg, and this still lines up with Bank of America's price target, price raise forecast for the S&P 500, because they say by the end of the year, meaning sure, it could scale up to that, but then come spring, they could agree with David Rosenberg and say, all right, well, it ran and now it's going to crash. Overall, guys, that is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Hit the like button on your way out. Drop a comment down below. I love you all. Lottery Stocks out.